Let's talk about why a stock market crash or correction is something that apes should be hoping and praying for. It's really the missing piece to the AMC short squeeze puzzle that we have been missing for 9 months now. But let's get into the economic data that is supposed to be coming out this next upcoming week, as well as the overall broad market situation and something you guys can do if you want to monitor this on your own. Talk about the direct correlation as well between AMC and the overall stock market, because AMC has a negative beta, so it discorrelates the overall market. So let's get straight into all of this information. So first thing you guys need to know, obviously AMC is still in a bullish uptrend unless we do break $40 to the downside. There's nothing to worry about. We are still in this bullish uptrend. We have seen a nice healthy consolidation level. We have come down. Now we are at $44.20. Nothing to be worried about whatsoever. So I want to get that off my chest first and foremost. But what you guys can do if you actually want to monitor this situation for yourselves is something that all trading algorithms and really analysts are paying attention to. So if you guys have the SPY on your charts, on the daily candlestick chart, and you do have the 50-day moving average pulled up, the S&P 500 has been following this 50-day moving average to a T since November of 2020, when we gapped above this, touching this 1, 2, 3, 4, 5, 6, 7, 8, 9, and now 10 times. But what is very interesting is, one, you're seeing a lot of fear in market closing on Friday. You guys can see all of this sell volume at about 116 million on Friday, which is a very large amount, as you guys can see. But we actually did close under this 50-day moving average, which is going to be huge. And really what I mean by algorithmic trading programs are watching this 50-day moving average is because these trading algorithms are really set to buy stocks and sell stocks at certain levels. So if you've been following this trend as a trading algorithmic program, then if you significantly break under this, you're going to trigger a lot of sell orders to go off to minimize potential losses if these trading algorithms signal a lot of potential downside risks. So that is what is big. That is what analysts are talking about. People that are actually way more knowledgeable than you and me on this situation. So I'm not pulling this out of, thin air. This is from people that are very knowledgeable on this, and this is what people are talking about. Pretty much a reason why the overall stock markets did close down about 1% on the S&P 500 and the Nasdaq, but even the index that is considered the rush to safety, the Dow Jones Industrial Average, closed down 0.5%. We do have a lot of things on the table, and I really do want to tell you guys, anything is possible in the stock markets. We could really rally up from here. We could hit all-time highs, or we could come crashing straight down to a 25% crash or correction. Anything is really on the table, so I wouldn't necessarily go out FOMO, make a bunch of trades based off of what is being said, but we are breaking this trend, and that is something you guys should definitely be made aware about. But also the direct correlation between AMC and this overall trend that is being broke to the downside. Now, AMC has a negative beta. It says right here, is AMC a negative beta stock? Despite being rare, a stock may have a negative beta, which means the stock moves opposite to the general market trend. AMC Entertainment Inc. shows a beta of negative 4.34%. So this is exactly how it sounds. AMC should, over time, this is how they track the positive or negative beta, discorrelate the market. So if the markets are up, AMC is typically down. If the markets are down, AMC is typically up. But an even bigger thing you guys need to know is something that I talk about all of the time. Hopefully I reach more people to really spread this information, because I don't hear anybody talking about this. I may have seen one video about this, but I've been talking about this for weeks, and you guys really have to put yourselves in a situation to think about what the hedge funds portfolios look like. As we do know, Citadel has 13,000 positions and a $446 billion portfolio. If AMC were to squeeze because some of the small or medium shorts got out of their short positions, they still would not be forced to cover. But if the overall market did come down, let's say 10, 25%, and we do know Citadel is over leveraged on margin, so if you combine the two between the over leveraging and the market coming down, that's where you're really going to see those big shorts be forced to cover. These bigger shorts, they can pay a 3-5% cost to borrow all day, any day, and will never be forced to cover until AMC does ultimately come down. So that is the situation. In short, why a stock market crash or correction is very important for the overall short squeeze. And that is the one thing, in my personal opinion, will cause the AMC short squeeze. And we have not been statistically more prone for a stock market crash or correction than we are right now. You're seeing this on the technical analysis, like I already did point out, where everybody is talking about this. I am not the only person talking about this, maybe in the AMC community, but just watch a couple videos about the overall market. Everybody is talking about this. It is no secret whatsoever. It is also no secret that the margin debt is almost at all-time highs. On July 21st, we did get readings of 844 billion for total outstanding margin debt in the US stock market. We should be getting these updates for August coming on the 21st of September. So here next week, we will get an updated version of what the margin debt does look like. And I think that is likely to have went up. But even regardless of that, the markets are really going to be paying attention to what is going to be said next week. And here is the Federal Reserve, the board, and what they do plan to say next week. Not necessarily what they plan to say, but when they do plan to speak. So we have the FOMC meeting. That is on Wednesday. That is to go over the unemployment numbers, the jobs that were created, all of that good stuff, which is very important. The market does typically have a reaction based off of that. But as well as that, what the market is really going to be paying attention to is coming Friday, September 24th. Right here, speech chair Jerome H. Powell. That is the top guy. If you guys are unfamiliar, Jerome moves the markets big. And a lot of people are anticipating tapering talks to actually happen, for an announcement for taperings to happen, and that would be a negative thing for the overall markets, given especially where we currently are right now. So it's really on the table. It's about a 50-50 shot if he is going to announce a tapering or if he's not. Just so you guys know, the European central bank, they already have started to taper. So we wouldn't be the first major country to be doing this. Europe is already doing this. So it's definitely on the table. But regardless of that, we do have the debt ceiling and the government shutdown coming at the end of the month. And it doesn't sound like either side is going to be budging whatsoever. And this could be really bad. We could get our credit downgraded. You don't want your credit score going down, right? It's just the same way as that. But the American economy uses their credit a lot more on a daily basis, obviously, to sell treasury bonds, sell those bonds to print more money. So this could be very bad for the overall economy if we do get these downgrades. But at the same time, a U.S. default would risk missing payments to Social Security and the military. So this is not a good thing. The government shutdown is not as bad. I went over this in a different video, but the average return for the S&P 500 during 18 government shutdowns in the last about 20 years was 0.00% on the S&P 500. So the government shutdown is really not the big thing to be watching for. It is the debt ceiling. And like I said, nobody is really trying to budge whatsoever. But even more bad information to go over, and there is so much. I don't even know if I can get through it all in this video without making it super, super long. But you guys already know about the Evergrand situation. They have 84 billion US dollars worth of interest due on September 23rd on their bonds. So if the Chinese government does not step in and bail them out, they will default on their bonds. That is very, very bad. And just so you guys are aware, I'm not actually going to pull it up because I've talked about it many times on this channel, but Lehman Brothers back in 2008, which basically started or helped to kickstart the global financial crisis, they had $618 billion worth of liabilities. Evergrand has over $300 billion worth of liabilities. Obviously, they're not in a situation to meet nearly enough of those liabilities with actual cash or interest payments on these bonds. So definitely a bad situation. It's going to be China's biggest bankruptcy if they do let this fail. It's quite possible China steps in at this point, but I think China would have stepped in a long time ago if they were going to bail out Evergrande. So regardless of what the dollar sign is, I don't think $300 billion would crash the overall market per se, but I think investors' perceptions of this big company going underwater are going to have rippling effects for the overall market. Mix that with the margin situation, with the uncertainty around bonds, and the technical analysis indicating indicating a further sell-off on the S&P 500. It is only inevitable. We are going to go through this crash or correction, in my opinion, in the next couple of weeks. Let me know down below in the comment section what your opinion is on this topic. We also have some other things I'll just briefly talk about just for the sake of this video. We did have the 2 Fed chairs that did sell out of all of their long positions by September 30th to put them into passive investments, essentially buying the dip in 2020, selling out now, even though they legally didn't have to, which is sending a red flag to a lot of investors. Also, we do have the bank reserve requirement ratios that are going up over $1 trillion across the board. So that is liquidity that is going to be sucked out of the markets by October 1st, sent back to their reserves. So that is a brief rundown what you guys need to know, the situation unfolding. Like I said, if you guys want to monitor the situation for yourselves on an intraday basis, just make sure you have the SPY up, make sure you have the 50-day moving average, and you are on the daily candlestick chart. So that is all for this video. If you guys do want to help support the GoFundMe, if you're subscribers of this channel, you know this exact situation. You guys have deposited now about about $1,000 of this $1,300 that is raised out of a goal of $2,000. This is Madison. She was in a very bad car accident. There was no drugs, there was no alcohol involved, none of that. The car rolled a couple times, about 10 to 12 times. An eyewitness said, you guys know how that goes. She was ejected from the car, a nasty scar. It's like a U shape all the way back, way to the back of her head, and a piece of her skull's in a cryo freezer, and they're going to try to reattach it in about 12 months. If not, a plate is going to go in, but she does know, her son's name. She knows my name. She knows, people that are important in her life. She knows their name. So it's looking good as far as if she'll make a full recovery. I think it's only a matter of time, but still not going to be working for about 12 months. So if you guys are financially able to, if you want to, if that is something you guys are into, I know some people are, then definitely check out that pinned comment in the comment section. That is where you guys can do that. I believe it's a full tax write-off. Contact a tax professional if you were going to donate something that you would want to write off on your taxes. I definitely feel you guys on that. The IRS does have a way of getting their money from you. But if you guys don't, if you're not able to, just say a prayer, keep her in your thoughts, all that good stuff. I'll be updating you guys as new information is given to me. But that is basically all for this video. I hope you guys enjoy the rest of your weekend, and I will see you in the next one.